Welcome everyone, it's the Crypto Lark and I am very excited to have on today Craig Cobb of Trader Cobb. Craig, welcome.
G'day, mate. Nice to be on the show. Thanks so much for having me.
Absolutely, pleasure without a doubt. Now, you've been around the markets for a while, so it's really great to have you on to actually kind of get some of that, long-term experience from someone who has been playing in markets for a while and has seen, ups and downs and all this kind of fun stuff happen throughout the years. So let's start off with what are your thoughts on the current state of the market and what should investors kind of be thinking about right now?
Yeah, good question, mate. Look, the current state of the market is obviously one that has been, well, this year it's definitely been a trader's market. Hodling hasn't really been the option of choice. Now, I'm not suggesting that's a bad thing to do because I've got an investment portfolio and a trading portfolio. So I've been getting just as hosed as many other people on my longer term investments. But the state of the market right now, and I'm just having a look at the charts right now, it literally, I'm waiting for the next move right now. So as we lead into Christmas, obviously that is upon us. It's literally on top of us right now. There's a lot of it's grinding lower, but it's lost that momentum that we had. So short term, I wouldn't be surprised to see not a great deal go on into Christmas. Obviously, this is crypto; it can change very, very quickly. I can see support at 3,000. Not suggesting we'll get there, but I can see support at 3,000. And I mean, look, it's just the best market in the world for a trader because it's just so volatile, as we all know. I'm looking at it now, and Sunday's up 1.24%, which is nothing for crypto, but it will move 5-6%, and we won't even bat an eyelid. Mm-hmm. So as a trader, it's just the best market in the world to be in. So long term, I'm a believer in the space. Don't get me wrong, like. I'm looking at this thinking what this can do, what blockchain can do, what it has done already, and has a massive, massive future. So I invest long term, but short term, I look to make an income or build that account at the same sort of time. So that's sort of I've got two focus: one, investing, and two, trading.
Yeah, I'm kind of the same way. I've got a smaller percentage for kind of active trading, and it's the thing, I don't over trade. I kind of look and like, ooh, that looks like an opportunity going on there today, and I might hop in on that, set my stop loss, and see what happens. If you can get that 5 or 10 or 15% on the backside, well, that's pretty decent by any account, right? So there's definitely that, but yeah, then there's the long term, which I think everyone's been pretty hosed down on their long term investments this year. that hodling Bitcoin, oh, it hurts. But at the same time, I'm not incentivized to sell it because I believe in the long term perspective of the asset. So it's a funny position.
One of the things that you said though was stop loss. When you're trading, I mean, as far as I'm concerned, if you don't have a stop loss, then if you don't have a stop loss, you're not trading. But that's my opinion of it and my belief of it, because without a stop loss, you're just hoping. You're buying and you're hoping, or you're selling and you're hoping. Because a stop loss, especially if you trade with margin, and if people do trade with margin, they should understand it first. I think there's a big chasm between understanding and education in this space. I often say a lot of people, and this is the reason that I started tradercobb.com and educating people, was because I was looking around. I got into crypto July last year. I've been trading financial markets for bit over 12 years now. And I just saw crypto and just went, well, I didn't see it. I got brought back to it by a mentor of mine. He said, Cobb, you've got to have a look at this market. I'm like, well, okay, I can actually do something with this now. And I pretty much just tools down and the other markets came over here because it was moving so much. And, looking at this market and what it's doing, there's a lot of people that were sort of saying things that you learn out of a book or saying things that, they were just regurgitating crap that, someone who's been trading for a long time, you think of that and go, "Ooh, I know that they mean well, but they don't know what they're talking about." And it was working fine last year because you just had to say, buy this, broke through this, and it would take off. And everyone was an expert. Everyone was an expert really quickly because all you had to do was buy. They didn't know how to short. They didn't understand what they were really looking for. They didn't understand what objective trading and subjective trading meant. And for me, it was like, man, the space needs to sort of, I don't mean this in any, insulting, derogatory, arrogant way, but it needed to get a bit more, mature a bit, understand what was going on. And that's sort of what brought me into the space. But this market, you can go long and you can make money when it's short, like when it falls, when it shorts as well. And I think even just something as simple as that, it can change people's perspective, change people's management of their portfolios, and give them the opportunity to be a truly recession-proof person. Because if you can make money whether the market goes up or down, well, as long as it doesn't go sideways for too long, you've pretty much got tools to keep you going for the rest of your life. And there's a lot that's going on in this space. I don't look. I'm not a fundamental guy. I'm trying. I'm learning. I learn a lot from others. But when it comes to trading, that's what I'm trying to help people understand the options that are available to them from somebody who's been around for a while, hopefully a little bit more trusted, which that's kind of the plan and what we're trying to do here. But it's just such an epic market, man.
Yeah, well, it's the volatility. This is the thing. I mean, you look at, I saw an article recently. It was like, oh, Sydney property prices down 10%. And it was like, 10%? Really?
That it?
Really? Like, where's the government to protect everyone now? Let's get someone in here. How did the government let this happen? Like,
Yeah.
10%, guys, look, But that's the beauty of the crypto market. The volatility can absolutely wreck you if you're not going in with any kind of risk management plan, or, taking your profits or setting stop loss and all these different things. But it's also this amazing potential for profits, because just because something might go down 10 or 20% on 24 hours, it might go up 10 or 20% the next 24 hours. And that's, or a different asset will go up 10 or 20%. So playing that kind of volatility can be very profitable if, you're patient and you look for the opportunities, right?
Absolutely. And look, the other bit is the margin. I know that a lot of people are like, BitMEX 100 times leverage, blah, 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 blah. And I get that because, it is scary before you do something. You go bungee jumping knowing that, okay, this is going to be a bit of a thrill, but you also understand that the likelihood of you getting hurt are minimal because you've got all this stuff attached to your feet and, you're with professionals. Well, that bit with professionals, most people go into this market, they go bungee jumping without a bungee. They don't know what they're doing. They really have no idea, and they just hope that something's going to catch them. So leverage or margin trading is an absolutely wonderful tool in the hands of somebody with the experience. And when I say experience, I mean, I should say understanding. Because you don't need to have lots of experience to trade, because I didn't when I started. You've got to learn. You'll make mistakes. That's all part of, the more mistakes you make faster, the quicker you're a good trader. You have to make the mistakes. But margin trading means you're taking a smaller amount, like a mortgage. You just put up the Sydney house prices. Say 10% for your deposit, which you don't get anymore. And you get, you can borrow the other 900,000 for your $1 million one-bedroom apartment, right? And the reality of it is, that's the same sort of thing as leverage, and you pay an interest on that, or if you're going short, they pay it to you. So yeah, using margin, it's a phenomenal tool. It is a double-edged sword, because your wins are bigger, so too are your losses, and that's why you need to have a stop loss, as you quite rightly mentioned. But I just think that a lot of people, they're scared of it because of a lack of understanding. And look, I totally get that. You don't want to dive into something without knowing what it's all about. So that's why education is so powerful and so important. I'm not saying paid education. I mean, you can go and watch all the videos on YouTube about how to use margin. You can read up on it, just get your head around it. But I suggest that people do start to get sharper on that, because we've had a good year this year, because it wasn't as the stoke levels are pretty high this time last year. If you recall, this was like mega bull town. As a matter of fact, I think today was one of the days we did $3,000 in a day or something like that. Remember that? There was 2 days where it just went straight through 15,000, straight up to 19 within 2 days or something stupid. But it's still been a good year because we have had a lot of direction. We have had a lot of momentum. It's just been down. And if you can't short, you've missed all that opportunity.
Yeah, I'm someone who, I guess I do a little bit more traditional stuff. I do set the stop losses. I watch for opportunities to go up. I don't short the market, and I don't do margin trading either, right? It's just that there's only so much time in the day, Craig. How do we find time for even more trading options? Holy cow.
Yeah, well, it just depends on what you want to put your focus on.
True.
I'm a full-time trader, I guess you'd say, but I don't trade full-time. I trade windows. I teach people that as well, to trade. And what I mean by a window is if people say, oh, I haven't got time. It's like, dude, it's a 24-hour, 7-day-a-week market. You've got time. It's just, you've got to make time, and you've got to understand how to use time and be efficient with time. And everything I teach is in a checklist. Everything I use is a literal checklist that you've got to tick off. And you trade these checklists in a window. So let's say you go, okay, between 7 p.m. and 9 p.m. I've got some time. Or between 7 and 8, and you go, okay, cool. Well, what I'm going to do is I'm going to see around that time what time, let's say 4-hour candles close, as an example, right? So you go in and you go, okay, well, the 4-hour candle closes at 8 p.m. So I'm going to do a scan at 7:30. So then you go through all your list of margin pairs, or even not margin pairs, up to you. And you look at the 4-hour candles, you look at the 2-hour candles, you look at the 8-hour candles, because the 8-hour might also close, obviously, every 2, 4, and 8-hour candle closes. So just work out when each candle closes. And you can do that on TradingView. It's really simple. You just move to the next candle, it tells you. And then you do your scan. And it doesn't need to take forever. There's some simple scanning techniques. Once you've got a checklist-based strategy and you know what you're looking for. See, when I go into the market, I'm looking to eliminate things. I'm not looking to find a trade. You know, for me, I'll go through my checklist and I'm like, all right, there's no reason not to take that. So I have to take that. It's not, oh, I want to trade, I want to trade, I want to trade. I don't want to trade. I'm not looking to find a trade. I'd rather not, if there's not something that's worthwhile taking. So having that checklist brings you that level of discipline. Having an understanding for how to go to the market and what you're looking for allows you to only have an hour or two and still be able to do it, because you're being really effective with your time, as opposed to, I'll just go and have a quick little look and see what I find. So it's just that structure that needs to come in and making things work around your own life. Because if you're going to change your life, you probably only do it for a couple of months. You've got to fit it in around your current life.
That's it. That's it. And actually being strategic, this is what it really comes down to in so many ways. And I feel like this is where so many investors kind of, fall on hard times, is actually putting money on the table before understanding what your strategy is.
Yeah.
Right. And that comes down to like, okay, take my Bitcoin that I have my hodling portfolio, right? Like I've put that in there, and that's like a long-term asset that I've got a strategy for when I might want to get out of that at some point, or get out of certain percentages of it, whatever it might be. Right. Whereas my trading portfolio, that's a whole different strategy that you have to look into in terms of, what, you're looking at the 1 hour, the 4 hour, the daily. I mean, where are you going with these trades? What are you trying to get in at? What entry points you're looking for? What exit points you're looking for? And if you don't have an exit point, what are you doing? Right. Yeah. And that's a classic mistake I think a lot of newer traders might be making, is not actually coming in with these exit points. Right.
Yep. Exactly. You've got to minimize your risk as well. So something as simple as, it's simple to me, is scaling out. So let's say, one of the great things about crypto is the fact that it can move so much. You can get massive, massive moves. So, we had a short on Bitcoin back, when was it? I can actually tell you the date, pretty much dead set a month ago, the 18th of November. It was a couple of days before that, was the 16th. After that first big fall, it was about 5,700 we got, and it was a 17-to-1 trade. So, risk, let's say risk is 100, then the reward was 17 times that 100. So 1,700, 17 times your risk multiple. That's with margin. Now, a trade like that, I had 2 losing trades that week as well, and that trade. And that ran over a couple of weeks, got stopped out, and obviously it has moved lower since. But, because of the size of the moves, you can have a couple of losing trades, and it doesn't really matter. But what you've got to do is you've got to scale out, or you've got to plan your trade, then trade your plan. So for me on that Bitcoin trade, I had said, because I've got a subscription service as well, I said to the people in there, and I'm like, look, listen, guys, I'm going to scale out 1-to-1, and then I'm going to leave my stop where it is. I'm not going to trail my stop until we see something, worthwhile trailing, because I was using the other half of it as a hedge. So when I say scale out at 1-to-1, let's say I risk $1,000 on a trade, right? My first target, let's say it's a $50 stop loss. My first target is $50 plus, the cost of the trade, like a little bit more on top. Say it's $60, right? Then I'll close $500. So I've got a reward of say 500 here, and the other position's got a risk of 500. Means that I net off to zero. So therefore I can leave that trade open now. And if the market does go, crazy, I've still got something on, but my risk is now zero because I've taken half of it off the table. Little things like that, if you actually do the math on that and you break down your trades and go, okay, well, this is how many losing trades and winning trades I've had, split it down the middle and say how many if I had a scale out at 1-to-1, often that can bring you into profit. Those little tiny things make such a big difference, really big difference. And that's all around managing risk, not reward.
Mm-hmm. There you go. I think you brought up a good point to keep in mind too, that you're going to lose on trades.
Yeah.
You will. You're going to lose on lots of them. I lose on lots of trades, but then, there's other trades when you do very, very well, right? And you kind of average those out over time. And, if you at the end of the month or whatever it might be, you go, okay, well, I've managed my risk well enough that I haven't, lost all my liquidity during my trading by, not setting stop losses and stuff like this, and that I have been able to come out the other end by, successfully managing that risk. So that's an important part to keep in mind here. That anyone who's out there saying that they get every trade every time, it's 100% profit all the time, they're blowing smoke
Run.
up your butts, guys. Because this is not how it works.
No.
It's the game's a bit different than that.
Yeah, you'll have drawdowns too. Like you'll go backwards, and don't beat yourself up over it. It's part of it. It's it's not always a wonderful world. Trading, the pictures of people in the Lamborghinis and the helicopter, all that crap. The reality is, most of the time you're sitting here staring at 3 or 4 screens like I am right now. This one's behind me. I've got a laptop that plugs into that as my backup monitor. The laptop's at home because I plan on going back there after my morning content. And looking out over the ocean and working from home, but because it's a beautiful day here in Sydney, so stuff being in the office. But yeah, it's not as glamorous as what it might seem like. It's hard work. It's focused work, I should say. I don't spend all day staring at the charts. I did many years ago. I thought being a full-time trader meant full-time hours, and the beautiful thing about trading is that time and money don't go hand in hand. If you've got a job, you get paid X amount per hour or X amount per year with your salary, and therefore you give up your time to get money. Well, with trading, I might find a trade that takes me 15 minutes from my scan all the way through raising an order, everything, and then I monitor it over the next few days, trail my stop, and I might make 15 grand off of that. It took me 15 minutes plus a couple of stop moves, call it 20 minutes all up. Now, that's the beauty of trading. It's not time and money, it's ability and money. And that strategy is where the strategy, having an application to come in. It's like baking a cake, right? You bake it the first time, you're terrible at it. You practice and you practice and you practice and you practice that same formula again and again and again. And you might even change it a little bit, put some of your own tweaks in, but eventually you're going to get there. That's what we try and provide people with, is an understanding for what to do and then repeat that process.
Yeah, it's so important to get that practice in, and this is for anyone doesn't trade out there, or isn't an active trader, and if you want to get into trading, good God, don't put all your money in.
No.
Don't max out the credit cards or anything like that. Take a little bit. Take I don't know, if you're comfortable losing $500, then put $500 in, and just say, hey, you know what? If I lose every single penny of that, I'm here for the experience of how to trade. I'm here to learn lessons on how to trade, and then look at it like that, because then you go into it and you say, I'm here to learn. I'm here to learn lessons on how to trade, and don't put in more than you're willing to lose, especially on trading. It's
Absolutely. Yeah.
It's because trading's a tricky game if you're not being strategic, and if you're not learning the lessons. And that's an important thing too, is learn the lessons. I've learned so many lessons. The only way I've learned those lessons is by actually getting out there, doing, putting the money on the table, letting those trades play out one way or the other, and that's how the lessons are learned. And that's a really important part of what it all comes down to, is I think it's saying something like the only failure is not learning a lesson from a failed experiment or whatever it might be.
You only fail when you quit, right?
That's right. That's right.
But one other thing I would definitely say as well is that people think they've learned something. You got to write it down. You got to write it down. When you take a trade, you got to take screenshots. So I'll actively take a screen. So let's say I'm taking a trade off of the 2-hour time frame. I'll take the 2-hour as I'm sort of raising the order, or after. Most important is to get the order on first. Then you take the screenshot of the 2-hour, the 4-hour, the 8-hour, and the daily. And then I'll write down, like really crude, just in take a box in and PowerPoint, bush, dump the screenshot in, type in, blah, blah, blah. I took this trade for X, Y, Z. Here's my plan, right? Next, then you go to the 4-hour. Here's anything that backs up the trade on the 4-hour, you put in notes. Now, what this allows you to do is, it holds you accountable to your own action. So you have to think through the process. If you've got a checklist like we do, you've got to think through, okay, did I stick to that? And many guys that I've got in the community and girls, they've just there's a green button or a red button. So they've made their little Excel spreadsheet things, and it holds them accountable to it. But the most important part of that, other than sending it in for mentoring for me, is really being able to go back and look at those. So let's say you've had a really great trading period. Like November was really, really good for me, right? The market moved really well, so therefore it was a good month. And let's say January is a terrible month, right? January 2019 is really bad. And you go, shit, what's going on? Where am I at? Why am I not doing well here? Well, it might not be that you're not doing well. It might be something completely out of your hands. You just don't know. So you can go back to your November and look at the screenshots, look at the trades you took and go compare it, one to the other and go, oh, okay, those trades are so much clearly better than what I'm doing in January. So now, okay, refocus, recalibrate. Here are the issues that I've been having and here are the mistakes I've been making. Being able to go back and look at your own trades man, that's the most valuable lesson you're going to have. But it's only valuable if you've got a systematic approach, because if you change it for every trade, it's, there's no consistency. So it's hard to be consistent in your results if you have an inconsistent approach.
There you go. I want to change the tact of the conversation a little bit away from trading to actually get your thoughts on the ICO market.
Oh, um, yeah, the ICO market. Well, I think it's definitely maturing. There obviously, as you know, that there are still ICOs going on. The ICO market, sort of this time last year and into January of last year, was a lot of the projects was little more than, like a school project. You had your artistic component, which was doing your video, right, and your website. You had your English component, which was doing your white paper. And then you had your marketing component, which is basically the video on the front of the web page, or doing a little roadshow, if at all back then. And because of the hype and the mania, that was all you needed to do. Now, you didn't need to have a great team. You didn't even need to spell correctly in your white paper. You could have spelling mistakes and it didn't bloody matter. Nowadays, however, it's you can still raise in an ICO, but VCs come into the space now. You do have to give away equity typically in your round one or Series A. Then your tokens are being scrutinized a lot more. But I remember in December and January, everyone was talking about tokenomics. Oh, tokenomics. I'm like, but what about the actual business? Everyone wants to talk about the token. Well, the token's going to be, who cares how many tokens there are if this business has no place to be? Do you know what I mean? Like, does this business need to be here? Does it, like, okay, cool, you're putting that on the blockchain, but why? Like, how is this going to give you an edge? You still have to operate in the business world. Do you know what I mean? Like, you've still got a product. You still have to sell it. You still have to run it. You still have to manage it, grow it, and deliver. So how are you going to do that? And I don't think there was enough people really focusing on that side of it. It was a lot of the hype. Now, I think you're seeing projects that are trying to raise. They realize the landscape is very different. They're having to come to the party with a much more slick approach, bigger teams, better teams, more trust they're trying to work on, because there was a lot of scams. There still are. I mean,
Yeah, but we are seeing a mass wave of professionalization that we are getting better offerings without a doubt.
That's right. So the space is it's maturing, and I think that, it's really good. As far as, people talk about price all the time because that's what they sort of clinging on to and hoping that it goes up for them, right? But, I'm probably like yourself, mate. We're pretty fortunate that we get to talk to a lot of pretty good people in the space, right? There's so much going on behind closed doors. There's so much going on development-wise. Some projects are just sinking to the ground, and that's fair enough. That's just, natural business process, natural, the strongest will rise. But, I mean, it's not going anywhere. Blockchain is revolutionary, and business is seeing that. Now, does that mean that it's going to be Ethereum, Cardano, Stellar Lumens, or your small little... I don't know. That's the thing I don't know. But I do know the blockchain is not going anywhere. It is here to stay, and that's why I'm here to stay, and that's why I'm so passionate about learning more. It's I can apply my trade as a trader within this market while I learn and try and find what the next Google's going to be or the next Amazon's going to be. You know what I mean? Yeah. So it's definitely growing up, and it needs to.
And that comes back to the other part of your portfolio, right? There is these investments that you make when you go, oh, that company, wow, they've got something really to offer here. They've got amazing long-term perspective. I'm going to accumulate that over the long term and actually, make a longer play on that in terms of, making an investment on it. And I think that even though the ICO market is really professionalizing, and we're getting much better ICOs on offer, the security token industry, when it starts coming, that's going to be a whole nother level of, I think, really giving investors something to make great profits from, potentially. Again, remember, you're investing in startups. Just because it's a security token and is registered and all this stuff doesn't mean that it's not going to fail because the team sucked and the business model wasn't there and the market wasn't there and all these different things. And I think that's one thing that a lot of investors are forgetting about in investing in ICOs or blockchain companies or any of this stuff. This is not breaking the rules of startups. 90% of startups fail because of a whole raft of different reasons. And again, it's about managing that risk, right? in terms
Yep.
of if I'm investing in this and I see it's, the team sucks or they're not missing or they're missing deadlines and all these different things. Well, that's starts to say something after a while, right? You can only miss so many deadlines before you lose all confidence of the people who have invested in your product, right? And when it comes to STOs, we're getting dividends and potential equity in companies and stuff like this, and that's much more appealing than just having an ICO where you get a utility token. And look, if those utility tokens can actually get a network effect moving forward, but no one's done that yet. No one
Yeah.
has that network effect yet. The biggest DApp on Ethereum right now is IDEX, and it's got a couple thousand daily users. That's
Yeah.
not enough. We need killer dApps that have 1 million daily users, but we're not there yet.
I think as well with the security token, there's the word security, which means it sort of has to stick to security laws, which brings a sense of legitimacy in, which brings other investors in, and we need those other investors. We need the traditional
Yeah.
investor to come into the space to grow it. And I think what you said, you sort of, I don't know why it was from what your words just were, but you with the ICOs and STO market. I mean, I think STOs will bring in a bunch of already established players because it's another way for them to tokenize or pull
Yeah.
money and raise. Well, I think what you said is you're effectively investing in startups, and it's what the ICO market and crypto has done for a certain extent is it's given everyday average people the opportunity to invest in startups.
Mm-hmm.
Now, that was the world for VCs and high net worth individuals. And this space has allowed us to get involved in that. Now, for some people, it's gone very well. For most, they might have seen their portfolio go straight up and then straight back down. But there's a lot of lessons to be learnt there. And for that exact purpose, whether you've made money or lost money, whether you're up or down currently, those lessons are invaluable. These lessons that people are learning now, like I've been through the GFC, that sort of made me as a trader. That was the first real run that I had that was pretty much life-changing. Things happen fast in crypto, so your lessons do come hard and fast. It can be overwhelming. It really can be. But what you're learning and what you have learned in the last 12 months, if you've been here that long, these are life lessons that you can take for the rest of your life. Continue to learn from them, because don't see them as a negative if you're down. See them as something you can learn from, because yeah, you are investing in startups. Some of them will undoubtedly do well. Some of them will do absolutely terrible and vanish. But the lessons will always remain. So just remember that. I think that's a positive everyone can take, no matter how dark it might seem. The lessons are there if you choose to learn them.
That's right. That's right. So it's perhaps one of the keynotes to take away from this: learn the lessons, guys. Don't let lessons pass you by, because that's the real, I suppose,
Yeah.
loss at the end of the day. Craig, final question for you for today: what are your thoughts moving into 2019? What do you see as being the big trends? What do you see as being perhaps the price trends moving into 2019? What are your overall thoughts for the year?
Oh, yeah, good question. Probably one I can't answer too accurately as far as price action goes. I mean, look, I read trends. The trend's down right now. I mean, I wouldn't be surprised at all to see 3,000 hit. I wouldn't be surprised to see a fair bit of buying come in at 3,000, because it is a significant level. It's the only level that I can see that's got relative strength on the chart. But I mean, look, it's hard to tell, because this market, I've studied what it's done in the past, right? It goes shoop up, it goes back down, and then sometimes it goes straight back up again. Other times it does a really long consolidation period, right? Now, whether 2019 will continue to be a consolidation period or not, I don't know. Will it drop to 1,000? I don't know. It very well could. I don't know I think if it goes to 1,000, things will be in a lot of pain, because the miners will be out, more or less, unless there's a new revolutionary way to mine. It's got to be profitable for business to operate within the space. If mining can become more profitable with lower prices, then sure, we can go lower, because it doesn't matter. People are still profitable. I'm interested to see what happens as much as anybody else. So I'm not going to make any price predictions or trend predictions. I'm sure we're going to have, momentum both up and down next year. And I know that sounds ridiculous to say, but what I mean is we'll probably have a period where people call it a bull run, and we'll probably have a period where people call it a bear run. Now, why am I keeping it so fuzzy? Because we have that nearly every year. Do you know what I mean? Like that's what generally happens. And so from my point of view, it's not about what is going to happen. It's how am I going to be positioned for what will happen. And I'm fortunate. I've been doing it a long time. So I can manage whether it goes up or down. But it's going to be a very interesting year. A lot of big companies are hovering. We got Backed coming out. Of course, that's the biggest thing. We've got the talk of ETFs again. It keeps getting pushed back, and it may continue to get pushed back.
But it'll
But
happen someday.
oh yeah, the second the conversation came into the fray, it was going to happen. There's a lot of people working on it right now, so it will happen. But there's a lot of positives to look at. I think patience is really key. It's going to happen. Where it happens, how it happens, I don't know. Will it be Bitcoin? I bloody hope so. I hope we get a good move on that. I hope that's one of them. But yeah, it's definitely going to be an interesting year with some new players, big players. So from where else it go from there, I don't know.
I think that the kind of fuzzy statement about it'll go up, it'll go down. I mean, if you look at 2017, we had this big run, and it was May, I think, right? And
Yeah.
started June, and that was like, oh my god, this is so exciting. Then it went down a lot
Yep.
again, right? And everyone was, oh, crypto's done, it's Bitcoin's dead, all this stuff,
Yep.
right? And then we went on the biggest run yet, right? Reaching the highest prices of all time. And to not think that these kind of trends are going to continue to happen in what's actually a rather small market. And
Very.
a very volatile market. I mean, look where we're at. We're around $100 billion market cap. I mean, the New York Stock Exchange probably does $100 billion before like the first coffee break in the morning. Like it's like it's nothing to them, right? It's such a small market in terms, and that's why it is so volatile. When we are at a stage where it's a $50 trillion market at some point in the future, maybe a lot less volatility
Correct.
in the price. So that's something we can all keep in mind too. Is that because we're small, because we're volatile, we are going to see these kind of movements happening, and I'm excited about 2019. There's a lot of good stuff going on. So,
Mate, you and me both, absolutely. And look, one thing I will say, if you don't mind, if anybody wants to have a crack, I've got a competition going at the minute. It's going to finish the 26th of December, so Boxing Day, midnight, and it's for picking the price of Bitcoin at the end of the year, so the 31st of December, midnight UTC time, and it's just tradercobb.com/BTC. And you can go into the prop draw for $14,000 US of prizes and bits and pieces. So if anybody wants to, it's just a name and email, simple stuff. It's just a bit of fun leading into Christmas. Tradercobb.com/BTC. Pick the price, and if you pick the price, if you're the closest to it, you're going to win some good stuff.
cool. Everybody loves winning free stuff, without a doubt.
Well,
There'll be a link to Craig's website down below, so if you want to go and check that out, it's there. Otherwise, follow the website that he just mentioned there as well. To get specifically to the drop, is check out more of his information and actually, check out some of his courses and things that are on offer. You can go and check that out too. There'll be a link down below again. Craig, thank you so much for coming on the show today. It's been a lot of fun. I hope it's been really valuable for everyone out there in the audience. I know, it's always amazing to have chats with people like you who can, see what's going on in the industry. So thanks so much for your time.
Mate, I appreciate it, and it's been fantastic getting to know you and have a chat. And I'll see you in Wellington next time I'm there.
For sure.